Economic fears grips China as its stock market tanks. Hello, this is Chart GPT today. Yes, there's a lot of fear going on in China right now. But a lot of people are talking about different economic indicators. We're going to look at a few of these. In any case, stock market is tanking. China economic fears grow. And of course, China being the second largest economy in the world, or close to equal to the United States, if China falls, it's going to probably go global and start affecting the rest of the world. So let's take a look at some of the reasons why maybe the stock market is collapsing, and look at more of a longer term trend as well as some of the short term trends. First off, take a look at the credit. Credit now has grown up to almost 250, almost 300% of GDP. Some people think that 250, 300 is about the highest it can go to sustain economy. So the bottom line is the GDP can no longer grow with this kind of credit growing, so the credit is going to have to start leveling off, or they're going to hit a crash. So this is probably affecting a lot of people's futures of expectation of where the Chinese economic model is going. They're going to have to slow that credit growth down, which is going to eat into their growth. We see also that here in this chart, bankruptcies are starting to hit because the reality of these Chinese credit to GDP ratios are starting to hit home, and we can see the rise of bankruptcies. And of course, this regardless of whether or not you believe some of the economic data, but this reality is going to be somewhat true. Look at the CapEx. It's starting to roll over. It hasn't really grown that much in, say, the last 10 years. So it's heading down. So the capital investment is the amount of money you invest in new plant material. And it's up around 40 now. The world average is around 20-25%, and that 40 is going to have to come down. So they're going to have a reduction because the credit expansion isn't going to be there. They're going to have less capital investment, so that part of the economy is going to collapse. So China is heading in for a huge awakening here. And of course, let's not even talk about the demographic cliff that China is heading into. Take a look at the foreign direct investment. It's gone negative. It's the first time it's gone negative in 25 years. So that the inbound investment is shrinking. This is another woe for the Chinese economy. So that's going to hit home here soon in the next few years. Chinese GDP forecast is shrinking. And you see here's the different firms that are predicting the GDP forecast. Goldman Sachs, UBS, Citi, and the average is it's going to shrink. That's about 0.5%, which is huge actually for China. And so it's slowing. The economy is slowing in China. Take a look at their money supply growth, that they're going to have to reduce this, or they're going to start having an inflation problem. So all this contraction in credit, contraction in investment, and contraction of FDI is starting to hit home, and it's only going to get worse if they don't level it off. And if they level it off, it's kind of like a car going 180 miles an hour, and now it's going to go 80. That slowing down is going to hurt them economically, so they're going to have to hit a recession here, or even worse. So the markets are beginning to feed that into the pricing. Here recently, the market has been crashing. The Chinese Flood Protection Team came in and bought billions of ETF to halt the market around. So the stock market is starting to see these realities of the future and starting to price in those risks. So let's take a look at the Hang Seng here. You can kind of see this kind of gray arching line is kind of showing you the trend. It kind of rose up with the expansion of credit, investment, et cetera, and now that they're hit market saturation, we're going to see that the stock market is starting to roll over. It hasn't hit new highs. In fact, it's going to probably hit some new recent lows, the COVID lows. It might even go back down to the 2008 lows. So this is the long-term trend. It's probably going to go to at least to the old time, maybe even go lower. Well, first step here will be the COVID lows, and may even go lower. And this is why the Chinese are worried. So it's not just the stock market, trading. It's actually being fed by the economic data, whether you believe it or not. The economic data in China is somewhat lack of transparency. Kind of asked the AI, what about the economic transparency of China? You can take a look at what it says there in the post link in the description box below the video. So it has some kind of key contributors there. Anyway, take our online poll. Is China heading for an economic collapse in the next several years? So we'll have to wait and see. In the meantime, don't forget to subscribe.